Good afternoon, everybody. Welcome to the market close for Friday, September 29th, 2024. It is a red day. It did start off actually green. It was doing pretty good most of the day, but we did slip into red. I did change the thumbnail, but I think many of you probably still saw the green thumbnail. So it is red, but that's fine. We're still doing good, and we're going to talk about how this month is going to end. We do have one more day after today. We have Monday. Monday's the 30th, so we have one last day to close out the month. But it's looking pretty good. It's looking pretty good. Oh boy. Well, let's not dilly dally at all. Let's actually jump into that market, and oh boy, just give me one second here. I have to pull up the screen. I normally pre-pull the screen, but this time around, I have not done it. I had not done it. It's a difference of a couple of seconds. All right. Whoops. There we go. Just positioning things the way I like them. So the TSX has slipped into the red. So we're down 0.16%. But quite honestly, it's going to take a lot more red than that if we want to finish this as a red month. It's not going to, unless we have a financial crisis of some sort break on Monday. We're well above this purple line here. This purple line is where we started the month, and I'll just show you. So right here, this is September 1st right here. We did start going in the red. We went down quite a ways. Pretty bad beginning to the month, but then we've recovered and we're doing well. We're well above where we started. So we're probably going to end this month green. And I kind of suspected that. And I expected volatility, and we sure got it. We got volatility in spades. Yeah. So thinking ahead, of course, we're thinking about October, and we do have a poll up. So I put up a poll on what you guys think we're going to see in October. Is it going to be green? Is it going to be red? Or do you all just want to get out, get rid of the poll? There's an option for that as well. We'll take a look at that here in a little bit. Let's quickly go through the markets. So the S&P 500, it's also in the red. It's down 0.12%. NASDAQ down 0.50%. Not a great day for NVIDIA, by the way. The Dow's looking okay. They're in the green with 0.39%. Gold's down 0.76%. Silver's down more, 1.21%. WTI, West Texas Intermediate, having a half decent day. It's up 1.53%. Bitcoin also having a pretty good day, up 0.88%. It was actually up quite a bit more than that for most of the day. Ethereum is up 2.63%. All right, let's hit that heat map. The heat map is, well, it's got a lot of red for sure, but there is some positivity in here as well. If you like energy, look at this. The energy sector is pretty much all up. CNQ's up 2.23%. Tolamine up 4.18%. Synovus up 2.46%. So that's energy's doing fantastic. Utilities, not bad. Enbridge is up a little bit. Even Pemina Pipelines, they're up 0.47%. So we got some good stuff going on. The banks are kind of flat on the bank side, but these non-energy minerals, oh boy, they're really getting hit hard. So a lot of our mines and things like that, not a great day for that sector. Oh boy. Alimentation, Couche-Tard is up. Loblaws is up. Dollarama is up. No, Canadian Tire's down. Aritzia is down. Just after I named them in a video. Come on, Aritzia. Don't let me down like this. So, interesting day on the market nonetheless. Looking at our ETFs, pretty much the same thing. They're down a little bit, like VFV's down 0.16%. However, both VEQT and XEQT, they're both up 0.03%. So they're tied today. XQQ, we looked at them not too long ago, a deep dive. They're down 0.65%. So it wasn't a best day for tech. And you can really see that when we flip over here to the US heat map. You'll see NVIDIA. NVIDIA is down 2.66%. Microsoft's down a little bit. Amazon is down. Costco is down. Ah, Eli Lilly's down. There's some big ones that are down, but there's also look at this. Tesla's having an absolutely okay day. They are up 2.42%. So that's not too shabby. Not too shabby at all. So we do got some winners, we do got some losers. Paba, if you like the Chinese market, of course, it's doing well. China just pumped a whole bunch of money into their market, the government. So I'm not surprised to see BABA up 2.44%. All right. Over in the world of crypto, things looking good. Things are looking up. Look at this. Bitcoin's up 0.88%. Ethereum's up 2.64%. Solana's up. Avalanche is up. Shiba Inu's up. I mean, there's a lot of coins that are up. Now, there are a lot, and I mean an absolute crap load of altcoins. There's more than 14,000. So we're going to pick one. We're just going to pick a random one that I have never heard of before. Here we go. Are we serious? P Network again? I swear, this is my God, this has to be the fourth time in a row I've clicked on P Network. Oh my God, go away, P Network. We'll pick somebody a little bit closer. Let's grab this one here. I don't know why I keep clicking on P Network. I don't even know how it's possible that I randomly keep picking that same one. All right, we got Avigacci. All right, so they are they're sitting at about $1.04. Now this one I actually recognize this name. I know that this is a coin that I think was prevalent. I think it's one of the metaverse coins. So, you know, they had their heyday up here at $3.30. Of course, the metaverse never really turned out the way everybody expected. So, not surprising that this coin is down. I'm never going to own this coin. Like I said, there's 14,000 crap coins out there. Probably a lot more by now. Be careful with crypto. Stick to the big ones, the ones that make sense. You know, your Bitcoin, your Ethereum, your Solana, XRP. There's a lot of good coins out there, but there's also a lot like this. And mind you, if the metaverse had worked, this, maybe this coin would be doing better. But yeah, they have not. The metaverse didn't really work. Honestly, I think the metaverse should have waited until after AI. Then I think there would have been a better chance for the metaverse actually pulling something off. But anyway, that's your random crypto coin of the day. And oh yeah, by the way, the Avigacci, if I remember correctly, I think it's kind of tied into that old from the 90s, that little game that you used to hold, where you fed this pet thing or something, and you had to keep it alive. So I think it's actually related to that. So just something to keep in mind. Oh boy, what a day. What a day, what a day. All right, let's actually get to the chat. Let me pull you guys, or let me pull me up big size, and we got a lot in here. Ricardo was first in the house with a good afternoon. And Vic is in the house. About to hit the road for a 4-hour drive on QEW from south to northern Alberta. But here long enough to hit the like button. That's a trooper. That's a trooper. And the funny thing is, here's the thing. I always hear about Vic driving. He's driving here. He's driving there. He always seems to be driving and looking for parking spots. But in one of the comments, he let something slip. Vic's a truck driver. He's got like an 18-wheeler. So now I understand why it's hard to find a parking spot. I really, really get that. Could you imagine trying to parallel park an 18-wheeler? It's a nightmare. I think it's a nightmare. Jonathan is here saying, I'm almost early. And we got Roku Stittsville. Happy Friday, all. Stan Gray is in with a hello, all. All right. And we got Jonathan. My birthday is in October, and my favorite color is green. Ooh, this might be Da Vinci level code here. I'll buy that. I will buy that. Now, let me just take a quick gander over there and see where the poll is sitting at. So right now, we've got 71% green, 24% red, and 5% just wanted to get the thing off the screen. Oh boy, I'm glad somebody picked that. Whenever I put one of these alternatives to sort of say, get this out of my face, I'm always happy when at least a few people hit it because, yeah, otherwise I wasted my time putting that option in. All right. Let's see. Divor Investor Pack says TQQQ given 300% in a year, Beto given 200%, Nifty Gold ETF more than 300%. Only one left is Boyle ETF. What's your prediction by 2025 and September 2024? Month Boyle rose 45%. Just want to earn safely. All right. Oh boy. Just checking the time. Last Wednesday, I was late. I missed the bell completely. All right, let's see. Oh, I should be in the right screen first. Here we go. All right. Who are we looking at here for this one? Boyle ETF. I will honestly say I have not heard of Boyle ETF, but let's take a look and see here. Here we are. Here's Boyle right here. All right. Well, this is a little bit easier. So you're looking at Bloomberg natural gas. 2x, meaning we got leverage here. So natural gas, I think it's always a safe bet. I do think it's a safe bet. Let's just take a look at their 3-year. Now, they haven't been doing good in the last little while, but we have had this situation where there's been an oversurplus of, well, basically fuel. So we're talking oil, natural gas, the works. Once that gets resolved, things will rebound, and this is I guess this is a stock that you could see some movement, but when you're looking at some of these big moves like this, well, that's the leverage speaking for you, right? Because it's going to move twice as big. Now, here's the thing. If you're going to get into something like this, I always say with something like this is not a long-term investment, because when you're looking at a leverage, so 2x, not a long-term. I think these are situational situations. Like, for example, if you can see that natural gas is starting to run, that's when you get in on something like this. And as soon as it starts falling, and you're not going to sell right here. You're going to miss that. You will absolutely miss that. So you might be selling in, like, it might be a little bit of the ways down. But if you started here and you're going to here, you're still doing pretty darn good. But that's what I would do. I would ride it up when it made sense. As soon as oil starts or a natural gas starts going down, I'm out, and I'm waiting. And depending on where I'm holding it. So, for example, if you're holding it in your TFSA, that's a situation where you can't buy it back for 30 days. So usually when you're playing things like that, you want to be doing that kind of outside of your registered. You can do it in your RRSP. That's fine. Now, if you're US, I'm not sure what the legal rules are in the Roth ROI, or sorry, IRA. I'm not sure what the rules are inside of that. Now I kind of want to know. But I assume it's going to be a similar thing. If you're basically having a tax-free advantage, there's going to be some rules based around it, kind of like there is in Canada. So I assume it will be very, very, very similar. All right. Whew. Paul is in the house with a hi. Ricardo says China released a statement telling their companies to not buy chips from NVIDIA. Chip war began. Yes. And that is part of what went on today. NVIDIA did not have a good day. This is the type of thing that will do it. But here's the thing. NVIDIA will be fine. Maybe it just means that if you didn't get back into the green yesterday, it might very well mean that you got to wait a little bit longer, but NVIDIA will be fine. They don't need China. They honestly don't. Let's see here. Paul says October 10th is Tesla Robo-Taxi Day. That could be interesting. That could be very, very interesting. It'll be definitely want to watch what happens to Tesla as we get closer to that day. So that could be a very, very interesting day. And here's the thing. This is where you have to make that decision. Those of you who are wanting to play this, are you going to ride the news? So, buy the rumor, sell the news type thing. That might be something you might want to consider. Well, it's time. There we go. We are now officially into the weekend. The market is closed. Woo! I love that. I love it when the market closes. We'll look once again at 415, only because for some reason everything on my in my trading view is real time, except for the Nasdaq. The Nasdaq has a 15-minute delay on it. So at 4:15, we have updated information for everybody. So we'll go take a last look at that time. Let's see. BTC was up more earlier today, but still up. Yeah, Bitcoin was doing great today. Bitcoin's had a pretty good week for the most part. So, they're back up. They were above 66,000 USD most of the day. I believe they've fallen back to just under. I think they're 65 something in that vicinity, maybe 65.5. Well, I can always look. I can always look and see where Bitcoin. Yeah, 65.7 right now. So yeah, here's this week that Bitcoin has had. I mean, look at this. So basically, from about Thursday of last week, they've been on it. They've been on a pretty good tear. So this is always fantastic. There's a little bit of a retracement here, but we've had the halvening. We've been expecting the big pump for Bitcoin, and it is going to happen. We just have to sort of wait. A lot of people, there's always usually a delay, 4 or 5 months after the halvening. So that puts us in October. I think in October, we're going to see some moves. I'm pretty sure in October, we will probably break the all-time high. Whether we'll see the big part of the move, that may not be till November going into December, but I do think that we have a good chance that we might at least. Now, here's what will happen. If we hit that all-time high, you're going to see a correction. So let's pretend that this was the all-time high. It would hit the all-time high, break it, and then people are going to sell. That's what happens. People sell. It basically it corrects, and then it starts back up again. That'll be completely normal. So when it breaks that all-time high, if you're all happy and like, oh my God, I'm making so much money, don't worry. Now, if you're a long-term investor and you're holding Bitcoin for the long term, you're probably used to it for one, but then I wouldn't even worry about it because it's not a big thing. All right, and yes, Shiba Inu up pretty good today for sure. Actually, let's open up a different page here. Let's just take a gander at this. All right, stocks and investing on my resource sites. CoinGecko. We're going to go over to CoinGecko for a moment. So this is all of the coins, and let's just go by today. So here we go. So these are the top performers for today. Now, a lot of these coins are really small, so I tend to not include them so much. Like a coin that's at 1 cent or a coin that's at a tiny, tiny fraction. But here is up in the top is Shiba Inu. Now, they're also really at a small fraction, but I know there's a lot of people that do love them. They were up 9.7%. Yeah, I'm just taking a look at how many. See, if I recognize the coin, like I recognize Gala, I recognize Render. I'm pretty sure I've touched on Maker before. There's Dogecoin. Look at that. They're up 5.5% today. Let's see. Helium is up. Helium should always be going up, because it doesn't weigh very much. Anyway, that was kidding. Not, don't think I'm endorsing Helium, the coin, for sure. And where's they're here? Oh, there's Bitcoin SV. That's a different thing. It's not the real Bitcoin. It's going to be way down here a bit because it's not quite up that high. Here we are right here. So it's currently up 1.5%, showing on CoinGecko. So just something to keep in mind. So yeah, Shiba Inu had a pretty good day. JJ is in the house with a Hapo Friday. For a minute there, for some reason, I saw that and I started thinking about house hippos. I don't know why. Ricardo says, anybody in BWXT? I've been in it since last year at 77 and 83 for a total of 15 shares now. BWXT, I've not actually looked at that one, Ricardo. Let me see if I can pull this up here. BWXT. Here we are. So BWX Technologies. All right. So it's definitely a tech company. Let's just pull the last year up. So they've been on a pretty good trajectory. Look at this. A year ago, they were about $73 up to 108. I like that. They have a small dividend yield, so they're mostly still in the growing. Let's go in and take a gander at their back end. All right, on their back end, they do have a good amount of debt, though, 121% debt to equity ratio, but they have a good return on equity. I like that. Return on assets are fine, 9.59. They got a good earnings per share coming in there. So it's not that bad. And you can see their PE ratio a little bit high, 36.66. Now, if they're expanding and if they've been looking at that, that could very well be why it's up a little bit. But not bad. Yeah, I think it's a solid company. They look very blue chipish. So that could be a good thing. And then they hit an all-time high today. All right. All right, this is great. The P network clicks on you. Absolutely. Oh my God. Let's find out what this friggin' P network is. I should be able to search here, I think. Let's see. P network. Here we are. What the banana bread is this? If it keeps on, yeah, you can sort of see it had its fall, but let's see. I just want to know what it is. Let's see. The most popular exchange to buy. They're on Gate.io. Yes, but what the frig are they? That's what I want to know. You know what? They're not really telling me anything. Let's go to Google. All right. What is P network? All right. It's an open source protocol that strives to provide interoperability across multiple independent blockchains. I like that. That's what Polkadot does. Okay, so P tokens by wrapping things. Okay, it wraps things. All right. Okay, well, maybe P token isn't as crappy as I thought, but you've already got Polkadot in there that creates their bridges. So I still won't buy it. All right. JJ says, let's see, StreamYard link for today. Oh, somebody wants to come on. Oh boy. I got to check with Vineet and see if it's okay. He's not happy with you. You wanted to time him out. Paul says, JPPND, what does the blue wrench mean? Moderatorship. JJ is a mod. That's what that means. All right. Let's see. Chad is in the house. Good day, all. Hello, Chad. Good to see you. I just need some coffee now. Yeah. Okay. JJ says, I was biking earlier today because it was so nice. No longer driving. It's pretty nice looking out here. Actually, the sun is out. I was glad. Favorite color is teal, but I prefer orange, red. I don't know what deals means, but that's cool. Patricia's in the house. Hi, everyone. I'm physically at work. Mentally, she's on the weekend, folks. Physically at work, mentally on the weekend. There we go. Let's see. On the 1 month, MSTR, so that is MicroStrategy, up 33% and Tesla up 26%. Too bad I didn't buy more. It's always the way. It is always the way. Holy banana bread. Let's see. Ricardo says, can you do wash sales, but the tax credit you don't get on 401k? Okay. So that's in the Roth IRA. There we go. Let's see. Haha, the bell's not late today. No, it's not. Patricia says, I have a question. Since I feel that I'm a newbie, early on, I bought ZWC, which is a cover call ETF, and I bought later on VDY. Isn't too much to have both. I was looking to clean up my portfolio. All right. So if you're looking to clean up your portfolio, and once again, it really boils down to your long term. So ZWC, and let's pull that up here. One of the BMO. So here we go. Canadian High Dividend Covered Call ETF. And we'll just look at the last year. So, it's doing okay. It's certainly moving up. Now, one of the things, the difference, I guess, between VDY and this is that you will have situations with this where if the market overall moves up really fast, you could have capped potential on that ZWC. So that's one thing to keep in mind. And VDY, I mean, VDY is fantastic. Like I love VDY. I think it's one of the best ETFs for, especially for somebody who's new to the market or who just wants something reliable that they can not worry about and just leave it alone. And as you can see, and you'll see, it's a pretty similar movement. Now, where you have both, they're both going to do fine. So if you do want to get out of one or the other, I think the big thing is going to be you would want to, this is what I would do. So I would actually work out the total returns on both for that a period of time. And if I had to make a decision, I might lean that way because, I have a feeling VDY might have better total returns overall. But maybe ZWC might, if you reinvest it, they might actually catch up. So I think it's going to be close, but I do think VDY, my gut tells me VDY probably wins over the longer term. But, you got the dividends with ZWC. I don't think they're super high, though. Let me just take a look here. Yeah, they're like 6.663%. So they're not super high. But, yeah, I would say VDY will be, you don't have to worry as much, I think, about VDY. You know that that's going to be nice and reliable. So I would personally, I probably would lean in that direction, but once again, it really boils down to now, if you're in a retirement situation, like if you're close to retirement and you're looking at, you just want to get a lot more income, then it would flip the other way for sure. Let's see, portfolio to sell all my ZWC stock to put them in VDY. All right. I think I've almost caught up. Paul says, when Bitcoin a green month in September, the next 3 months are green. Yeah, well, I'm kind of expecting the next 3 months to be green in Bitcoin. I'm expecting us to have our final bull run for Bitcoin, and then after that, we'll see what happens. Because normally in crypto, Bitcoin runs first. Then as Bitcoin finishes, then the altcoins tend to run. So we'll have to see if that holds. We are getting to a point that I think Bitcoin, it's going to be interesting. I'll just leave it at that for now. We'll talk a lot more about it when we get a little further. William says, hi. Hello, William. How are you? JJ says, no link. Oh, boy. Well, I'll drop a link in a little bit for if anybody wants to come on. So whether, I know JJ wants to come on, but if anybody does want to come on, yeah, we'll do that. We'll do that in a little bit. First, before I do that, I do want to just take our final look at the market. So definitely something to see. William says, how to buy Bitcoin from brokerage accounts. Is it possible or just Bitcoin ETFs? Basically, yes, just Bitcoin ETFs. So when you're doing it from your brokerage, here's what I usually will recommend. If you want the purest, sort of like the best ETF to have perfect exposure to Bitcoin, I would avoid like any of the like the BTCY or, because it's using covered calls to give you dividends, but it does lose some of that upside potential on Bitcoin. So I would go with a straight up spot Bitcoin ETF, like BTCC.B or if you want it, that's the one that's hedged to the American dollar. I think BTCC alone. And here's honestly, I would be looking at the management fees in this case. In this case, if you're just going with a straight up a Bitcoin ETF, go with the one with the lowest fee. I actually did do a video on the channel on them and I broke down the fees. So you can always check that out as well. Oh gosh. Uh, maybe I'll just see, like, give me a second. I'll see if I can find the link for you here, William. Boop-a-doo-doo-doo. Can I search easily? Search across your channel. Yes, I can. Bitcoin. Let's see, the Bitcoin exposure in your TFSA. Here we go. Just give me a second. I'm just copying this for you. All right, this is the one I'm looking for. Boop-a-doo, come on. Give me a second here. All right, here's a link for it. All right, okay, there we go. We'll bring that back. Bring back this. Let's drop that link in for you. All right, here you go. Perfect. All right. So yeah, just check that out. I've got a whole bunch of the different ones here. All right, Paul says, at my retail work, August started stocking Halloween, and last week the Christmas stuff started going on the shelves, and all the barbecue outdoor furniture gone. Oh boy. Yeah. Yeah, we're full course. We're full speed towards Christmas. I'm actually really, the fact that this is our last Friday in September, I'm like, wow. It seems like we just started the summer and it is over. So, Halloween coming up pretty darn fast. We got about a month to get ready for all the spooky stuff. All right. And Patricia says, I was leaning towards VDY as well. There we go. Thanks and thanks. And one more thanks. 3 thanks. Perfect. All right. 416. Let's take that final look at the market. Then I will drop the link because I know that JJ is just biting at the whatever to get on over. All right. So we finished the day. Once again, pretty much red markets across the board, except for the Dow Jones. So the TSX did finish 0.32% down, S&P 500 down 0.13, NASDAQ down 0.53. We had the Dow Jones just up a little bit, 0.33. Gold is down 0.77, silver down 1.22. WTI finishing up 1.56. Bitcoin right now currently at 0.89% up, and Ethereum 2.47% up. Over here, let's get rid of the losers. I don't want to talk about the losers. We're gonna go into the weekend. Let's even get rid of some of those. There we go. So this gives us some general idea. So you can see here, utilities, things like Fortis doing good, up 0.72%. Fortis, by the way, for those who don't know, is our second dividend king in Canada. So a dividend king means that you've been increasing your dividends for 50 years in a row. Now, Fortis, you will see since right here, look, since June and the rate cuts, they're doing really, really good. Now, speaking of these rate cuts, I did want to quickly mention we did have GDP information drop today. So June, our GDP was up a tiny bit, or sorry, July, but the preliminary for August shows our GDP stalled at 0%. And we'll talk a little bit about that on this week on Sunday. But what that means is that October, so I believe it's October 23rd, the next rate cut meeting for the Bank of Canada, there's a chance they're going to respond to this by a 50 basis point cut. I didn't think we would be seeing them so soon, but it's really starting to look like we may, because we've got a lot of things happening in the economy. And we're going to touch more on this on the weekend. There's been a lot of stuff that's very recession-like. And I know they have got to be a little worried about that. So the thing I'm really worried about is when our next job numbers come out, because, oh boy, that could be a catalyst for some big rate cuts right away, because they do not want a recession. So that's going to be it's going to be very, very, very important to see how that all works out. So yeah, that is, once again, this is this whole thing. And today's video all about this. Almost everybody, all the stocks that I mentioned in that video, they all have this pattern. They all do. It's fantastic. You can just see it. You can easily see it. Like it's, there's a couple of exceptions. Like within utilities, you got Algonquin. Don't touch that ever, please. Just leave them alone. Lightspeed, another one that is doing well lately because it looks like they're going to be bought. It looks like they're going to be up for sale. So some people are saying, "Oh gosh, let's get in early," because a lot of times when you are the one that's bought, there's a predetermined stock price. So let's say, for example, and I don't know who it is that is thinking of buying them. I believe it's an American company, but they could say, "Yeah, we'll buy them all we'll buy you for $28 a share," which is up here. Well, that means at the close of the sale, even if the share price is down below, that means that they're going to close it out at $28 a share. So you're automatically guaranteed to get that if you are holding. So, but you have to look at the rules too, because sometimes they will put in stipulations as you have to be holding it by a specific date. So you always want to read all the fine print. Make sure that you don't jump in on something like this and then get burned, because that can happen. So just something to keep in mind. All right. Let's get out of there. So yeah, not too shabby. ETFs, once again, as I said, everything looking good. VEQT pulled ahead of XEQT by only being down 0.01 to their 0.03. So not too shabby. I know that you guys have mentioned you wanted to see another battle. That would be a fun one. VEQT versus XEQT. That could be that would be a hard one to call, a very hard one to call, but that could be interesting. All right, over on the US side, once again, NVIDIA, and it was mentioned, of course, China has said they don't want to buy any chips from them. That kind of hurt them a little bit today, but they'll be fine. They will be fine. Broadcom is down a little bit too, negative 3.03. So, but there are winners on the US side too. Let's get rid of the losers. Bye-bye, losers. Nice knowing you. And we got, Tesla. Tesla up here. Verizon. There's a good amount. DE is up. And then, of course, BABA. We did mention BABA before. So AbbVie is a nice little company as well. They're doing fantastic. And Google I think Google and Tesla are pretty much the leaders in the Magnificent Seven for today. And then, of course, with crypto, once again, look at that, Bitcoin's up a little bit more. Crypto doing pretty well. I'm actually surprised. XRP is a little bit down, but most of the coins are doing fantastic today. So you got to like it. You got to like it. We are getting ready for whatever is going to happen to Bitcoin. I can't wait to see how that is all going to end. All right. All right. JJ says, I'm impatient. JJ. All right. Let me get the link. I will get the link here. All right. I now have the link on here. Give me a second, JJ. I will post it in a second here. If anybody wants to come on, you are more than welcome. I will just warn you that with this link, it is to StreamYard, so sometimes it doesn't like some browsers. It really prefers Chrome for some reason. They should fix that, because I'd like to be able to use StreamYard in my Safari, but I can't. But yeah, anyway, anybody who wants to come on, you're more than welcome to. You're more than welcome. I will drop it right now. All right. Paul says, I work September 30th, 2 p.m. to 6 p.m., a BC stat holiday. 1.5 OT. Yes. Yeah, Monday is a holiday. What is it? I believe it's an Indigenous Reconciliation Day. I think that's what it is. This is where we need Jordan here. Jordan would know exactly what it is. But yeah, it's a newer holiday, but from my understanding, I believe the market's still open, but banks are closed, and I don't think bonds are trading. So I we'll have to figure that out, but I think the market still is open. let's see. William says the energy sector was green. I guess bad news in Florida is good news. Yeah. Well, yeah. I mean, with the hurricane in Florida, a lot of the oil producers and a lot of the drills, the platforms out on the Gulf, were probably shut down, and they batten the hatches. So that could certainly help oil for sure. Jonathan says, I like VDY too, and I have been thinking about it for retirement income. But is there any downside to being heavily weighted to Canadian banks? Um, I like our financial sector. Like I think the way they're structured, the big six are. I don't want to say that they have. It's not like they have plot armor, but it'd be really hard for something bad to happen to them. They've been able to weather pretty much everything that's been thrown at them. I think they're strong, and it's just part of the way that they've structured the Canadian banking system. It was kind of a lot of the initial people who set up the banks were from Scotland, so it's very much a lot like the Scottish banking system. So it's pretty cool. Oh, JJ's in the waiting room. How long should I make him wait, folks? Should I make him wait a long time? Because I know he's really anxious to get in there. Yeah, Patricia says I was leaning towards VDY as well. Tim says, is there an S&P 500 ETF that excludes Tesla? Elon is not my favorite guy. Ooh. More than likely, I don't know. I don't think so. It's one of those things to. Jordan is here, by the way. Oh, well, just a second. I'll finish with Tim first, and then we'll talk to Jordan. Then we'll bring JJ in. Let's see. Tesla being pretty much the entire Magnificent Seven, I pretty much think most of them are going to have it. So in a situation like that, you might have to go with individual sector ETFs to sort of avoid. Well, you'd have to almost avoid tech. It would be hard. It's definitely hard, Tim. Unfortunately. Okay. Truth and Reconciliation Day. There we go. I had the reconciliation part, but Truth and Reconciliation Day. Awesome. All right, let's let JJ in the house here before he gets too anxious. All right, here we go, JJ. How the heck are you?
I mean, I'm fine. I was fine
Have to
being
give me
left
a
in the waiting
second.
room
I have
for a
you on
bit.
mute.
It's okay, as long as everybody else
Everybody
can
else
hear
can
me
hear you. It's
properly.
just I can't hear you. All
I
right, give
hope
me
so,
1
because
moment. All right,
I
gonna
did.
mute that tab. I'm gonna do this. All right, I should be able to hear you now.
I should be able to talk now,
Yeah,
and
I
how
can
big
hear
is
you.
the
I can hear
sound?
you. I
All
wasn't.
right.
Yeah, I normally I try to set that up ahead of time, but I wasn't.
Mm-hmm.
I wasn't expecting a guest. I
Ah,
wasn't.
I did try to message you earlier. I wasn't too sure of my overall schedule today, and basically had to
Ah,
move around a couple of things. So, but here and there now, I was able to squeeze in some free time now for the next hour or so. So everything worked out basically. I did try to message you like pretty much half an hour before the stream, but I guess you were too occupied. So I was like, let's just show
yes.
up on the stream and be
Getting
super
getting ready.
spontaneous.
Getting ready. Yeah.
Exactly.
All right. All right. Now, Bill has a response here for Tim. Let's see. To invest in the S&P 500 without Tesla, you buy your S&P 500 ETF, figure out how much Tesla is in your holdings, then short sell that amount of Tesla or any other holdings you want to exclude. That's a strategy. That, technically, yeah, technically. Jay says, I'm glad I got out of NVDH and put most
Oh
of the
my.
funds in QMAX, which I have 832 shares, and HHL 570 shares. I'll probably switch back to individual stock and small caps by December. Whew. Yeah.
It's a good
No,
move.
I think it's a good move. I think, yeah, it doesn't look like that bad of a move.
Especially since I remember, okay, so MVDH is the non-leverage version, so I guess it wouldn't drop as hard as, say, MVDE, the leverage version of Harvest. But then again, right now, NVIDIA is not doing that well just because of stupid news and stupid global pressure. But to be fair, I think holding NVIDIA long-term is still a good strategy, but it's also not a bad idea to swing trade it right now, given the fact that it was down pretty hard today.
Yeah, yeah, understandable. It's kind of weird. Like tech investors are very. It's like walking on an eggshell. Any little bit of news
Oh
of
yeah.
any kind is enough to panic the market a little bit. So I think it's going to be. I I think it's like we have to get deeper into AI before people will start to get comfortable.
I would say so for sure. I would say technology is one of the most volatile sectors, but then also gives you the so it goes hand in hand, right? Like maximum growth and maximum volatility long term. So that's where any little bit of news it causes some fear and FOMO and greed, and it's always cyclical. Like the emotional aspect is always cyclical. However, long term, like if you want to swing trade it or if you want to hold it, I feel like tech is always the way to go, or at least it would always belong at least in a good chunk of your overall portfolio. Speaking of
Yeah,
which, how
no,
much
absolutely.
technology do you hold yourself?
Um, well, not as much as I want to be holding. I think right now I'm actually under 20% in technology.
Mm-hmm.
Um, but it should be higher. It should be higher. But keep in mind, I am also kind of right now I'm kind of playing the real estate and utilities. I'm starting to play utilities
Yes.
as well. So because of that, those sectors I'm going to keep on pumping them up. So other sectors that normally might be closer to 20% are going to fall as a result just because you this is something like in a sense, this is almost unprecedented because the amount of rate hikes that we've had and to get
Mm-hmm.
ourselves back down, we've never run into a situation like this before where we've had this much over an extended amount of time that's
Right.
creating catalysts for those sectors. So, I'm going to take advantage of it. I mean, there's no reason why I wouldn't.
Especially I believe there's a couple more rate cuts to go right before the end of the year, which means that it will definitely
Mhm.
benefit those three sectors that your video on focused on
Yeah, well,
real
there's
estate,
two rate
util.
cuts left. We got
Yep.
October 23rd and then December. There's none in November.
Ah, okay.
Yeah. So, and a lot of the banks are actually saying, they've been saying, like CIBC has been very vocal about it, that,
Mm-hmm.
hey, we need to start making these cuts bigger because if we don't, the economy is going to be in trouble. And, there's a lot of recession fears. And I'll tell you one thing that did come out today. I don't have the data right in front of me, but this month, last month, I guess, we had more businesses actually shut down, close their doors, out of business. The last time
Mm.
we had that many was at the beginning of the pandemic when that sort of hit. But yeah, it's not looking good. Like we're losing a lot of businesses, a lot of people are just, and plus, not only are we losing businesses, we also have record low people starting businesses. So it's kind of that perfect storm for, for a recession. We got a little bit of stuff going on. Now, I know the government doesn't want one, and I know they're going to do everything they can, and the Bank of Canada certainly will respond. But here's that thing. Even if we don't actually go into a real recession, I think for a lot of people, it probably feels like they're in a recession already because, it's tight out there for a lot of people.
Yeah. It's not a great outlook, at least in the short term for sure. And the fact that the overall Canadian economy is not doing that well, which is also one of the reasons why my portfolio has very little Canadian exposure for the most part.
Well,
I mean, yeah, I mean,
keep in mind though, since June, since we
okay.
began rate cutting, the TSX has been outperforming the TSX. Or sorry, the TSX has been outperforming the S&P 500. There we go.
Is there a second TSX key that we don't know about?
No, it's the secret one, the secret one. But no, we have been outperforming the U.S. Since rate cuts. But now, keep in mind, the U.S. has now begun rate cuts. So now let's see what happens with
Hmm.
us both cutting rates. But
That would be very interesting to look at.
Yeah, well, we can revisit that in about 3 months. see how that has changed. But these, since June, the Canadian economy has been the place to be. So nothing too shabby there.
I guess there's always a balance between holding both the TSX 60 and the S&P 500. It's like I guess it's always a balance in the long term if you don't feel like looking at your portfolio too often. So it's always good because looking at the very long term performance since like decades ago, there was at one point like pre 2006 where the TXX was massively outperforming S&P 500. Just correct me on those dates if it's a little bit off. But then after that, since 2010, it's the S&P 500. Who knows? This could be the next switch over. That could also always happen. So,
well, the other thing too is it does make sense to be diversified into both.
Of course.
International exposure, including, the U.S. exposure. I sort of count the U.S. as separate from international because where the U.S. is the biggest market in the world, you want exposure. Now, you don't have to, as I've said before, I've said this many times, you don't have to invest directly in that market. There's lots of options within Canada. There's Canadian ETFs that invest in American companies. There's CDRs. CDRs are fantastic, especially for long-term investment. So there are a lot of options where you can keep everything in your Canadian account and without worrying about, so much about, withholding tax and things like that. Now, I will point out though, if you are investing in an ETF that holds American companies, if those American companies pay dividends, there is withholding tax on those dividends, but it doesn't hit you, it hits the holding company. So for example, let's say VDY, that's run by Vanguard, the Canadian edition. There is also an American Vanguard. What happens is 15% of all dividends on those stocks in that basket, that 15% is taken. It's gone. It's just completely gone. So, you don't have to worry about it. Like the dividend they tell you they're paying on that ETF is exactly the dividend, that you're getting. So you're not losing 15% of that. It's already gone. But that's the one thing. But you don't really have to worry about it. And this is kind of this thing. I know a lot of people really obsess over, oh my God, 15%. I better just get VOO and put it in my RRSP instead. Sure, that's an option. That is an option because then you're not paying that 15%. Behind the scenes, that doesn't happen. You get everything. But here's the trade-off. When you pull all of that money out, it's now 100% taxable.
Yeah.
So you didn't avoid the tax man. You just pushed it off into the future, and you're now in a situation where you're paying 100% on it. So, which is better? It's up to you. Some people are want to nickel and dime it to the point where like, okay, let's do the VOO, and it's fine if you have the if your only choice, let's say your TFSA is full. Then VOO is probably the smarter bet than putting VDY, for example, into your into a personal account. So it makes sense in that case for sure. Me and my rants.
But then again, but also keep in mind the fact that if you're buying VOO, you're not really buying it for its dividends anyways. Like just look at the difference in dividend distributions because of the fact that most of the S&P 500 don't pay dividends that much anyways. So the 15% on that is so minute. And when you're looking at VDY and VOO, if you look at the actual holdings of VDY, it's literally holding VOO. And the extra MER costs are literally just doing the conversion rates for you. So that's where, so I would say it's not necessarily the withholding tax. It's a little bit, it is causing a little bit of performance drag, but for the most part, it's the fact that they are doing these conversions and they're thereby charging the difference in MER that's causing the performance difference.
The MER on VDY is very, very small. So
it is.
It's not something I would even worry about too much.
It's like 0.09%, something like that. Whereas like VO is like 0.02 or 3%.
Yeah.
I mean, still a difference, but in the long run, you're paying for that convenience, right? Like you're not worrying about conversion fees and all of that, which is it could be a huge hassle to deal with as well.
Yeah, and Paul's pointing out pure Bitcoin up 144% in the last year. MicroStrategy. Now, MicroStrategy, which is funny because they're pretty much holding, like, they're holding so much Bitcoin that they're almost like an unofficial Bitcoin ETF. But look at this, they've been exploding up 435%. So that's absolutely crazy if you look at them. Actually, let's look at them.
That's also because of the fact that they hold so much Bitcoin themselves, right? So they're just
Well,
driving
yeah,
up
that's what we
performance.
said. But they're performing much better than Bitcoin. All right, MicroStrategy. Here we go. All right, let's go. Let's just go to the last 1 year. I mean, here we go. So right now they're sitting at 176. A year ago, they were sitting at 31. So just put that in mind. That's crazy. Now, I know a lot of people have given Michael Saylor and MicroStrategy a lot of crap, but it's hard to argue when you see this level of growth. And I've heard through the grapevine that MicroStrategy is starting to look at lending Bitcoin as well. So I heard, and I saw something today that very, very interesting. I saw something today saying that there's some kind of a 2x thing that they're looking at doing. So I don't know if it's MicroStrategy. I didn't get a chance. Like, it was quite literally, I was in the process of getting ready for the show. So I was like, oh God, I don't have time to look at that. But I have to look at that. I have to look at that later and see what they're up to. But yeah, this has just been, and here, keep in mind, if Bitcoin does what a lot of people are thinking it's going to do, imagine what this is going to do. It's going to be big. I know Paul is very much, into all of this, and I think Paul's going to get a big payday at the other side of where this is all going. I'm just going to remove that commercial because who knows? That's one of the things I'm thinking. Was it a commercial that got the copyright claim
Possibly.
from the tennis people? I'm like, seriously. Oh, look at this, another baby. It's like you get rid of it, it comes right back.
Delete. Right up at the beginning.
I'm deleting babies. Oh boy, I'm gonna get like this stream's gonna get taken down. Can
you imagine that ad was for Pamper or something, like baby stuff related, and they filed copyright claim on you just because that ad was just playing at that split second.
Here's the thing: if you're a company and your ad happens to show up for free on a streamer and people are watching it who may have babies, why would you want to do something like that? Just say thank you. Thank you. We got some free advertising. So
I know, right?
That's what I would think. But some companies, and the only company, it's only the Paris Grand Slam. And I have a feeling, though, I think it was my countdown clock, because since I've removed and changed the countdown clock on the, that opening thing, because I only put the opening thing up because people who are watching ads are like, we're missing the first minute of the show. So I made a minute countdown and threw it at the beginning to let, people have the ads, basically cover the countdown clock.
Mm-hmm.
So, but of course, to those people who are like, Amazon Prime. I was going to say Amazon Prime. Those people who are like YouTube Premium, they of course then get to watch the countdown clock. So I had to put something in there. But the new one since I put the new one up, I haven't heard anything from the Paris Grand Slam anymore. But
that's good. Knock on wood, right?
Yeah. Well, if it happens again, I think I might actually appeal it the next time, because I'm like, why? Why Paris? Why? Is there not enough French content?
Out of how many streams you did they actually file a copyright claim on you? Like, 2. If you look at it,
okay, it was 2, and
that's just not that bad, I guess.
No, it's. I mean, I've only had 3 copyright claims in the history of the channel. So those 2. And back when I used to do a channel member video, I had this 1 month they wanted me to do a reaction video. So I was like, oh dear. So I did a reaction video for them because that's what they voted. And that one got claimed. And I was like, okay. But I didn't care about that because, yeah, I mean, I watched, I think it was a Jubilee video, and I reacted to that. And, the fact that it's not public anyway means it's not making any money. So there's no money to claim, but because that's what happens when they claim it. And it's even with the Paris Grand Slam. So, all the money I made on the beginning of, and they were both live streams, all the money I made on those live streams, not from like donations, but from people watching ads at the beginning, they got all of it. It's just like bang for that. It's not a lot. It's like a couple bucks. I mean, I don't make a lot on ads, but what can you do? What can you do?
I mean, now thinking about how much revenue is actually being generated from YouTube, maybe it's time to think about expanding and creating more sources of income. What do you think? What are your thoughts on that?
Well, yeah, that's kind of one of the goals. So, I do have a lot of plans, and we'll talk probably more about this on Monday. So not this Monday, but the following Monday. That's when we're having the
3-year, right?
Yes, and I'm gonna have the bomb.
Woo!
So yeah, that's gonna be fun. I got lots of plans. So in a way, like I feel like there's two veins for this channel. There's the stock veins, and then there's the news vein. So we have kind of both going on at the same time. So it's kind of like how I'm balancing those, what I should do. One of the things I've actually been toying with, and I don't know if I'm going to do this or not, but I might, is just impromptu little news videos. So it'd be like a this week news flash. So it might be like a quick 2 minutes, or if something breaks, where I just sort of come on and say, hey, got some breaking news, blah blah blah, and then just drop those. So I'm thinking about that. I haven't quite figured out exactly how I want to do it, but that's just something that's in the idea bin of something that I'm thinking about doing. Just news. So yeah, this week news flashes. So, it might be something. I might just, probably what I'll do is I'll try it.
I think it's a good idea for sure.
If it doesn't work, then I'll get rid of it. I'm not going to do something that doesn't work all the time. Now, another thing too that I've been thinking about as well, the challenge. So the 0 to 100K challenge. So I've been doing updates on it monthly, but I'm wondering if that's too much. If I maybe should just be doing quarterly updates on that, because that does take a video spot every week. And sometimes there's not a lot that changes on the month, but on a quarter, there's a lot more to going on there. So if I do that, I'll probably put up a vote and let the community decide what's going to happen.
I think what a good idea on the 0 to 100K TFSA challenge is, I do second you on doing like an in-depth video quarterly, but then maybe monthly or bi-weekly, you can post like a community update of what you've done, just like a brief, like a short summary of the actual trades you've done, and like the amount.
Yeah, that would be interesting.
And then for the actual in-depth analysis, you leave that to the quarterly updates, so that you definitely free up more time, and that one way our community can actually follow along with the posts, just with the posts. But then if they actually want to like learn more in depth, say for like the less seasoned investors, then they can definitely go into more in depth.
Yeah, you see, and it's kind of one of the things that what I was thinking too is that, by doing it monthly for the first year and a bit, it gives people a chance to sort of get all of the kind of informational video type things, like sort of like, okay, here's some little lessons along the way. Then what we would be looking at is a lot of times, like, for example, if I do another rebalance, I've already done a lesson video on that. So, like putting that all into one, that might be a good idea. Now, I do see as well down here, Jungle Eddie saying monthly shorts on the 0 to 100K. That could be an option too. So I certainly do like shorts. And Patricia saying doing more shorts, newsflash. It's a good idea. So yeah. So they wouldn't be, I don't think they'd be shorts per se. I mean, because, shorts I'm limited to 1 minute. And you know me, I want to give my opinion as well as just what happened on the news. So it more or less be like maybe
Yeah.
2 to 3 minutes, maybe 5 minutes if it's something big. But yeah, it'd be interesting. All right.
That's always
I
something
also
to play with.
missed this from Nine. So Nine says I
Yeah.
treat the RRSP like a last-ditch emergency fund. If I lost all my income, I can pull the first 15K tax-free, if not compound the account and melt down when I'm older. So yeah, that's not a bad thing at all. And oh, sorry, Paul was just saying when I said 8 to 2, I meant of my Bitcoin investments, 80% is ETFs and 20% is MSTR. Yeah. Yeah, it makes sense that MicroStrategy would be more volatile than Bitcoin, but they have done really, really well. So, I'm kind of torn. I think actually think that there is a MicroStrategy CDR. I think there is one.
I believe so. Yes.
Yeah, that might be worthwhile. It might be, do your due diligence, of course, but yeah.
You missed a previous comment from Mohammed.
I missed one. All right. Ahmed says, hi, everyone. Bought and sold SMCI and STLA this week. Made 1,900 US. Not too shabby. Yeah, not too shabby at all. Now with microchip, or super microchip, I just have never liked them. I don't know why. I've really not been a fan of them, but I know that there was some, I think it was the NASDAQ was having charged them for some stuff as well yesterday, and a little bit interesting, but now, okay, just a second. Now we get to Patricia. I was kind of just thinking of MicroStrategy for a second. Are we talking about FCHD today or Monday? I'm not sure if we're talking. I had no plans to talk about SCHD today. Why? What's going on Monday? I'm just wondering. Am I having a market close Monday that I don't know about?
I guess so.
I might be. I don't know. Yeah, I mean, Monday's the last day of the month, so it kind of does make sense to have one. So I'll let the weekend folks decide if they want to do a Monday or not. So, but I'm open to it. I'm thinking about. I've been thinking about December. So every December I do something, an event, and the Vlogmas thing is really, really, really taking hold in my head. I'm like, it may be an interesting idea, but it'd have to be like a financial version of Vlogmas. So it'd be more or less, I just have me and some topic, and probably going to be out and about. Maybe I'll be in front of the Parliament buildings or something. Who knows? Well, it depends on it.
Can we do a group vlog? That would be pretty cool.
If it's too cold, I won't do that.
Oh man.
I'm not going to stand out and do a little blog in front of the Parliament buildings if it's like -20. That's just not going to happen. But
that would be hilarious. Can you imagine?
I have a feeling it's going to be warm anyway. But I'm playing around with it. I'm warming up to the idea. So because I have to do something. Last year, it was all of the market closes. I did I think I did like 12, 13 or something in a row. So it was just it was crazy, but this show came out of it, so not a bad thing. Not a bad thing at all. All right. And Jay, this is interesting. So FEQT, so that's the all equity Fidelity one. So they have some Bitcoin exposure.
It's like 2 or 3%, something like that. And because of that crypto exposure, their MER in comparison to the ones from iShares, Vanguard, and BMO, which is around the 0.22 to 0.24%. From Fidelity, it's like 0.67, 0.7% because of that crypto exposure.
But they could beat the pack, if they ride a bit of that Bitcoin wave up. So.
Temporarily for now. We'll see.
Yeah, we'll see. It'll be interesting to see. Let's see here. Paul says, especially magic. I keep calling
magic.
Yeah, Magic
So
the
we're getting the
Gathering.
magic show, right? We're having the magic show for 5,000.
No, we're not. We're not going to do a magic show.
Oh,
It's only because on a camera, I find it a little bit harder to do magic because
no,
it's
that's
like if your
fair.
hands leave the frame, then it's like, oh yeah, there's where the trick is. So it's a little bit more difficult. But I'm not saying we'll never see magic on the channel. We
Hmm.
probably won't, but I'm not saying never. Um, yeah. Oh, sorry.
How's
This one here.
my video and mic? Because I'm using Edge, so it's kind of glitchy on my side. I don't know if
Your mic is fine. I think I saw a couple little glitches, like where it looks like
yeah. You know what? I'm just gonna refresh this link on Chrome. I'll be right back.
Okay, sounds good.
It's kind of glitchy.
All right, let's see here. Patricia said, I said Monday because I was confusing your 3rd anniversary of the channel. I know. It's going to be fun. I love event videos, and this is going to be one of those. And then we're going to also, once we get 5,000, that's going to be another one too. So that's going to be after that one, of course, unless something absolutely crazy happens in the next week. But I'm not expecting that. Let's see. I'm already thinking of October. I know. All right. So Patricia says, I'm happy for the SCHD split because my entry in it was high in my RSP. I'll be able to reach my goal count. Yeah. So SCHD. Well, I don't think we've ever looked at it on the channel. Let me pull this up. All right. SCHD. Here we go. So this is your Schwab US Dividend Equity ETF. And it's funny, a lot of American YouTubers absolutely love this ETF. And you can probably see why. So, yeah. So when is their split? Did it already happen? I honestly don't know because I haven't really been paying a lot of attention to it. But maybe. Oh, JJ's back. I'll throw him in there. But I do like what this ETF has been doing. I think it's a good ETF for sure. You can't
Hey, can you
argue.
hear me properly?
Yeah, I can hear you. You can't argue with a slope like that. So you definitely can't. Actually, let's go to Yahoo. I know. It's like, did the split happen? I don't know, but Yahoo will. All right. SC.
It hasn't happened yet. It's on October 11th.
Okay. Perfect.
Yeah.
Perfect. Yeah.
I bought Perplexity Pro for my research, and it's like so good. It's like so much better than Copilot. Like the subscription is actually worth it because like Copilot, I was using Copilot before for like some of the writing, and the results it was doing, I had to spend so much brain power just redoing everything. It was such a waste of time. But like after like using Perplexity for a bit and then switching to the Pro version, it's like so much more accurate. So speaking of which, that's what I'm using right now. Yeah.
Very interesting. Yeah, it's funny. I went to Yahoo and then I realized, wait a minute, it's an ETF. So Yahoo doesn't show me what I want on an ETF because it doesn't have the statistics, which is where it normally has its last splits and stuff. So I'm like, but yeah, not too bad. So yeah, and Patricia's saying October 11th as well for that. Is it just a 2-to-1?
It's a 3-to-1 split.
It's a 3-to-1. Oh, that's much better. Yeah, that'll make it much more affordable for sure. So gotta like that.
So apparently it doesn't actually affect any of the ETFs and holdings that it currently holds. It's mostly just the difference in price. Everything else stays the same.
Oh yeah, exactly. I mean, I've seen a few different people do this. Who was it? Oh, the NVIDIA CDR did a split. So after NVIDIA did their split, they did one as well, just to get their price down a little bit. And it makes sense. It makes it more an easy entry point for people, especially for newer investors who are coming in, because a lot of people come in and they're like, especially if they're young and they're new and they're like, I can't afford $100 for a single stock. But it's like, oh, this one's $20. I can grab it. So one of the nice little things. Luckily, though, there are, you know what? I just had a
You know,
video.
also part of the reason that I much prefer Wealthsimple over Questrade is the fact that Wealthsimple has so many
Fraction.
so many fractional shares for like pretty much the vast majority of ETFs and stocks that you can think of. Whereas Questrade still is Questrade has been the same since like years. It has not done any innovations. Whereas if you look at Wealthsimple from 4 years ago compared to now, they've implemented so many innovations. And the only reason why I had Questrade at the beginning was because I had to trade US dollars for my RSP, and where with Wealthsimple you had to pay to keep that. But then after reaching premium and everything, and the fact that Wealthsimple is just much better, that's why I made the in-kind switch. Just like that.
All right. And Jay says, I'm curious about Coney, but it'll be a while when I get a US account. So yeah, Coney is one of those yield max. So it's basically they're invested. Well, they're not investing because it is synthetic.
Yeah.
It is synthetic. So, but what they are looking at is Coinbase. So if you look at Coney, they haven't had the best when it comes to their price. They are paying a crazy dividend though.
Their total return is pretty killer, given the fact that
151.725%. Crazy amount. Monthly dividend. But I mean, your price, you got to kind of expect that with a dividend like that. But here's the thing. You go look at that dividend and you're getting like a buck, a buck and a bit per share. We're getting $2 at one point. So it moves a lot depending on how much the fund makes.
Yeah.
But it's risky. It is absolutely risky. I think synthetic covered calls are very risky. It's one of the reasons I don't really invest in them. Because they're beyond my risk level. I have a conservative risk level. They're beyond that. But some people love them. Some people are making a crazy amount. So you gotta. What can you do?
I think that also depends on the exact synthetic strategy they are holding. I believe with the yield max, they're doing a long call with the short put. That's what's creating the synthetic covered call.
Yeah. Vineet just arrived.
He did. I realized that.
Yeah. So what you missed here, Vineet, is earlier when JJ wanted to come on the air, I said I have to check with Vineet to see if it's okay because you keep threatening to put him in a lockdown or a lock.
I've already done that a couple of times, except for the fact that he just never bothered to check.
Okay. Oh, yeah. That's funny. That's funny. But anyway, good to see you, Vineet. Good to see you. Patricia says, Wealthsimple having the option to buy fractional shares has been a game changer for me. Yeah, it is. Now, here's a funny thing. Call me odd. But when I was investing primarily in Wealthsimple, I always didn't want to see a fraction. It's like, no, I want whole numbers. But that's just me. I just like the whole numbers. But yeah, and that would hurt with some of the bigger ones. I was just like, no, I'm just going to avoid them. But the video idea, and this, tell me if this is a good idea. I'm thinking investing on a budget, a video where basically we look at really good stocks that are all under $20.
Yes, that's a good idea.
Yeah, and then look at I could probably do a couple of videos. I could do one for dividends, one for growth.
Yes,
growth or total returns. So yeah, there's a couple of videos out of there that could certainly do. That could be good. That could be.
That would be a video series for sure.
Yeah, absolutely. Because you can do a whole bunch of different ones. Yeah, that just sort of came to me.
And then there's also one where we're focusing on blue chips, but then because of the fact, but then we use the CDRs instead as a replacement.
Whoops, right here first. This is a good point. So Jungle Eddie is saying fractional maximizes drip investing. Yeah, because you don't have to drip in whole numbers. So it doesn't matter what it is. Whatever you make in your dividends, you could put it right back in as a fraction and keep building up that fraction. That's not a bad thing at all. Not a bad thing at all. And once I get back into, I mean, eventually I will probably get back into Wealthsimple, because what I want to see with Wealthsimple is
Hmm.
I just want a better interface so that I can do
For
trading online.
desktop, you mean?
I'm
Yeah.
okay. I mean, I'm okay with the app. I think the app's fine. But right now, the reason that I have a lot of stuff over on National Bank is for the reason that they have a better interface when it comes to trading. So some of the
For
shorter
sure.
term trading. So once I think they beef up that interface online for Wealthsimple, I'd be more than happy to be there. Um, it's like, 'cause I mean, you take today. I mean, this morning I got most of the news stuff done really fast because National Bank, their direct brokerage, was just acting completely wonky, as in not letting anybody in. Um,
Oh, dang.
Pretty much until like about 1 o'clock this afternoon, I was finally able to get in and make some trades. But even then, it was like pulling teeth because they just were having bad network issues today. You know, and But I mean, it doesn't mean that Wealthsimple can't have that either. But I do really, really like Wealthsimple. So
They
what I
are
have in
very
Wealthsimple right
innovative
now
for
is
sure.
pretty much anyone who uses my referral code. I just leave that money in Wealthsimple, so that sits over there. So anybody who hasn't tried Wealthsimple, by the way, there's a referral code down below. Head on over. They give you $25. They give me $25. It's a great way to support the channel and a great way to begin your investing journey with commission-free trading. There we go. All that fun. Patricia says, and see, at first, me too, Candace, but I got over it quickly. Yeah. And the funny thing is, I'm very, I come from a science background. So fraction shouldn't really bother me anyway, any way, shape, or form. And they
Yeah, why
normally
do they?
they normally don't. Like I'm okay with, like, this is 1.24. I'm okay with that. But I guess it's just with the stocks, I'm like, I like to have a full stock. I don't know why. I should get over that. I really should, for sure.
That makes sense. My only slight nitpick with fractional shares on Wealthsimple is that when I specify like an exact amount that I cannot buy a whole share,
Mhm.
it will match that exact amount, which means that I like right now my spreadsheet has up to 5 decimal points, which is kind of annoying
Mm,
because it makes it so big, whereas everything else is a whole number.
yeah.
So
The other thing that
that's the only
works
part
as
which I don't
well
like.
is that when you want to sell or buy, the fact that it doesn't do it right away, it sort of holds it
Yeah.
to the end of the day. Now, because it does that, it means that you can't get, if you're trying to buy a dip in the middle of the day fractionally, it's probably not going to work out for you. Unless that dip is still there at the end of the day. If it goes back up, you're kind of out of luck.
So in that specific case, what I would recommend doing is then buy as many whole shares at that specific limit buy, which means that the remaining value, which would be less than one share, you can just fractional buy it because
Mhm.
that one little fraction won't matter much in the large scheme of things.
Exactly. That's exactly
So just
what
do it. Just do that. It's just one
you would
extra
do it
step,
that
but
way
it's
for
much
sure.
better.
Absolutely. It adds an extra move, but if you're gonna get a good deal, it's not that bad of an extra move for sure.
Convenience for 5 seconds.
Yeah, yeah, exactly. Jay says the only cons of Wealthsimple is right now they don't support non-resident Canadians. Oh,
That is true.
really? I did not know
They
that.
don't.
Let's see. If you move overseas, I heard you get 4 months, or they freeze assets. Only Questrade or IBKR support non-residents. Well, hopefully that changes. Hopefully, as they
Yeah.
get bigger and they add more and more features, that's something I definitely think they should fix. If Questrade can do it, then there's no reason why Wealthsimple can't. I really
I'm
think
pretty
that
sure
should
they
be fixed.
can. I think that's also one of the reasons why Mike Ireland on Discord, like he
Mhm.
that's the main reason why he could not go with Wealthsimple. Otherwise, he would have. But the
Yeah.
thing is, like right now, as soon as you declare non-resident for tax purposes, they will give you that amount of a period that Jay mentioned. Otherwise, they will
Mm.
force you to close either like freeze all your assets
Mhm.
or and close your accounts. So you will have to be forced to transfer
Yeah.
at least for
Yeah.
now.
Okay. That's definitely a big con for sure. I don't think I like that that idea either. So yikes. Yeah, that's not good. Not good at all. You know what I haven't looked at in a while here? I'm just curious now. So I know
RMAX,
that
of course it is. Of
it's
course it's RMAX.
RMAX. It's RMAX. I'm hoping to see them up at. I'm actually really hoping to see them hit 19 in October.
Oh, it didn't do
But
that well in the last 5 days.
no, I know they've been a little bit of a slump here, but there's more rate cuts to come. So now keep in mind too. When is their ex-dividend day? Because this actually could be an ex-dividend thing. Let me see
Actually,
here.
you're probably right with that one.
Gotta go over to key data. So let's see here. September 27th. That's exactly what it is. So look, let's go back. All right. Let's just go to the 3-month to make it a little bit easier to see. Yeah. So right here is bang 27th right there. And they have that big drop. So that was their ex-dividend. So what happens is on the ex-dividend date, if you get a company that pays a lot of dividends, those dividends get deducted from the market cap as outgoing cash. So as a result, you do get a drop. So that's exactly what that is. We're just looking at the ex-dividend day coming in. So that'll rebound quickly enough in, first bit of October. So I'm looking forward to that. But that also means, yay, more dividends locked for me. So I'm happy about that as well. Just something to keep in mind. But, this, like I said, this has been, go back to the big screen. I mean, these guys launched $16 and, being up here at 18.49 right now. Well, they were at 18.85 before they had to pay out dividends and such. But I'm still looking forward to this. And I see that there's no reason that this is not going to be, by the end of October, this should be above 19. I have no doubt about that at all.
I would even bet and say it would probably even rocket fuel to 20 if those
might.
rate cuts keep coming.
It might. Well, it really depends because the next rate cut is towards the end of October. So you have to keep that in mind. So one of the things too is a lot of times when a rate cut hits, you don't get the benefits of it immediately. So you got to look at it from in the perspective of REITs. So some of the benefits they will get right away. So as people are watching this, a lot of people moving out of bonds and things like that, saying, "Oh yeah, more rate cuts. Let's move out now. We'll move back into REITs because they tend to be a nice, stable income producing asset that you can get into." So that will happen. But when you're looking at the mortgages, all of the mortgages that they have, that money there, that's got a little bit of a leg to it. So as you cut, it's not like you instantly get money back. It's that, it continues to go on further and further. So, and then, as we get, so you take, for example, let's say they did a 50 basis point cut and October 23rd. You'll get some benefits right away, but you'll get a little bit more of a leg on the rest of them. And that'll be fantastic. I can't wait to see what happens. I really can't. It's going to be fun.
I do second Vinit's next comment, and in the fact that in terms of REIT exposure, is RMAX your only exposure, or do you also buy individual REITs?
No. I mean, I have RMAX. I also have RioCan.
Okay.
I also have Timber Creek Financial. So Timber Creek Financial is not a REIT. It's a MIC, a mortgage investment company. And I'm looking at probably adding a couple more, but right now those are the three that I've got all of the irons in the fire for. How much RMAX? Obviously I got what I have in the challenge, but there's another account that has quite a bit of it as well. So I couldn't tell you the exact number off the top of my head, and I'd have to log into National Bank to look at it. And
like 40%?
That would be, oh God, no, I would say 40%. No. No, my real estate, because you got to keep in mind, as the rates went down, I dropped my exposure to real estate to zero.
Yeah.
So when we began
when
we began raising the rates, I went completely out because I knew what was about to happen to them. So I went to zero. And then in the pause, I slowly started adding back in, especially towards the end of the pause. And then, now I'm beefing them up so that, some of them are getting the full ride and some will get this back end of the ride, but I'm fine with that. My goal is probably, I still don't see the entire thing getting more than 25% of the entire portfolio. I mean, even though I know, but keep in mind, that's 25%. Let's say I get to 25 REITs, 25 utilities. There's 50% right there. Bang. So, and the third one, as anybody who watched the video today, consumer discretionary, I'm being a little bit more hesitant on that one. I still think they're going to do well,
Hmm.
depending on the stores. But at the same time, the problem is they're going to be more sensitive to some of the other things in the economy that can happen. Whereas I think utilities and REITs, I feel a lot safer with them, depending on what's happening. Um, you take, if we have, let's say we do fall into a recession, people are going to stop spending, and that will hurt that sector. So that to me is like if we don't go into a recession, I think that will be a good sector. If we do go into a recession, oh boy, that could be, it could turn around on us. But right now I'm going to be optimistic about it. I'm going to be optimistic and think that they're going to do some big rate cuts, try to stimulate the economy a bit. But I'll reevaluate that after the next jobs number too, because that could be a scary thing. That could be if unemployment keeps going up, that is
When is
not.
that coming out?
That's a good question. Let's find out. I don't know if I can find out yet. But we'll take a look. We'll see if it's up there yet.
It's too new.
What's that?
It's too new. It's not even been refreshed yet.
Well, no, it's just the Canadian calendar. I don't know how far ahead it goes. All right, so let's see here. October 4th. Friday, October 11th. Unemployment. So yeah, soon. Basically, after I've eaten my my da bomb that week. So yeah, that's when the number. So the 11th is the big one coming out. Unemployment. That's what we want to see. So, and you can see right now they're actually forecasting a 6.3%. The last one was at 6.6. So if this forecast comes true, we're good. We're good. Everything's fine. But if we get something bigger than 6.6, then it's like, uh-oh. I'll say it. Uh-oh. So yeah, definitely something to keep in mind. All right. Vineet says, did anyone get an email from Wealthsimple about how they did dividends wrong last year? I got the email.
Really? I didn't receive anything from them.
I didn't. I don't know if anybody else did or not. Yeah, that's strange. Maybe.
I always do my own dividend tracking, like by going to the actual spreadsheets, and for the most part, it seems pretty accurate.
That's exactly the way I do it too. I do my own dividends. I keep track of stuff like that. I don't rely on something like Wealthsimple. But there's probably people who use things like Passive, which pulls the data from Wealthsimple.
Yeah, I do that too.
Yeah,
it's like a snapshot.
Wealthsimple is giving incorrect data, then Passive is going to be incorrect. So, or Blossom, if you're pulling, because Wealthsimple is one of the few brokers that will connect with Canadian brokers that will connect with Blossom. It's just because the other ones aren't willing to release their APIs to Blossom yet for whatever reason. But let's see. Jay says, "I wish there was a Lockheed Martin ETF."
They are doing very well, and I did post the U.S. defense ETFs if Jay wants to look at. So, and there's also a global one, which is what I have a little bit in Shield. So you can also look at that as well.
Yep. I'm actually surprised that something like a Lockheed Martin that I don't think there's a CDR for it yet, but keep in mind, CIBC is always adding more CDRs like they do. I think just recently somebody mentioned they added another 10. So
I think Vic mentioned that last week.
I think it was Vic. Yeah. It can happen I think it can definitely happen. Let's see. Jungle says the only email was about the August 23rd Royal Bank dividend. Okay, so maybe was it just one dividend, Vineet? I do not know. I do not know. Jay says I prefer single ETF like the NVDH. Yeah, because with a single one, you're looking at, the only reason basically the ETF is more of a wrapper so that you can do covered calls on it. That's or covered calls and leverage. So definitely, yeah, there's definitely some good ones out there like that. It really depends, of course, on your portfolio goal. If your goal is income, then these are going to be right up your alley. But if you're young, you probably don't want to go too heavy. You probably want to really concentrate on growth because you can pick,
I digress.
you digress. But you like the income?
I do, but keep in mind that like my tax burden is so low. So I
Mhm.
mean, I just reinvest anything. So you kind of just, I mean, I kind of do like a mix between growth and
Yeah.
income. So it's
Well,
combined together. It's almost like a hybrid strategy, which is like it helps. It's also like the psychological burden
yeah, it
as
is.
well,
I mean,
because
okay, and I
during a
understand that.
downturn, you always have that.
Yeah, when people learn about dividends, they're cool. Like I think when I first started investing, um, I love dividends like crazy.
Hmm.
And then, once you get over that honeymoon period with them, then you start looking at the math and you're like, okay,
That is true.
do I want a 12% dividend or would I rather this total return stock that's going to give me 25%? It's like 12 or 25. I'll take the 25. So that makes a lot of sense. Now, the only reason, in my opinion, that when we look at a retirement portfolio, the only reason we go much more into income opposed to returns, total returns, is because of if the market decides to go into a bear market and you're relying on total returns, all of a sudden you don't have the total returns. So you've pretty much shut off your growth, faucet where, you may want to, if you're living off of that, you may want to keep the dividends. And by having an income portfolio, if you pick the right ones, you're still going to have a good supply of income coming even in a bear market. So that's one of the reasons that retirement is there. Now, when you've got a growing portfolio, you go into a bear market, it's like, oh well, that's fine. I can just continue to stack as you're still building your portfolio. And then of course, on the other side of that bear market, when all of these assets, go back to normal, they expand and they've expanded your TFSA. So when you do get to retirement and you switch over to that income portfolio, well, you've got more room now because of all of the growth. And that means you're going to potentially have much higher income than somebody who perhaps just did income all the way and didn't maximize their growth. That's kind of the general gist of why you have that whole difference in the ages, growth, hybrid, income, but it also depends as well. I mean, there are some people who, for example, they don't require any income out of their thing. This is just what they're doing. Like they may, if you have enough pensions that your income is going to be fine in retirement, and this is more or less you're just building into your estate. Well, that becomes a bit of a different thing. At that point, I would almost still go with a total return, just because you're maximizing what you're going to be leaving behind for the next generation opposed to needing actual income. But I have a feeling most of the people here, there's a few that I think are in that category, but I think most of you guys are more or less like, I just want to be able to supplement my OAS, my Canada pension, so that I can live a more comfortable life in retirement. And that, of course, follows that route if you get to it. All right, sorry, I talked really, really long.
No, that's great. Now going back to retirement, here's an interesting thought. Would you, on a personal note, would you recommend going the income strategy, or would you still go the more traditional 4% withdrawal?
um, all right, so
And
we're talking.
is that still relevant today, given the fact that inflation is so bad?
Well, this is a blip, right? Inflation right now it's going to go back to its normal thing. So we shouldn't, unless they start money printing again for other stupid reasons. And with governments, you never know. You never know. Things
Uh,
should get back to more of a normal thing. Now, mind you, the prices are not going to come down. I
no.
know a lot of people are like, what do you mean inflation is down now? What do you mean you hit your target? Everything is still so really expensive. Well, inflation coming to its target means that things are now only going to go up slowly instead of going up fast. Because, the worst thing that we could actually have would be deflation. So as much as some people are like, well, wait a minute, I want them prices to come back down. Let's have some deflation for a bit. That would be like that's almost almost an instant recession, because the
Yeah.
problem, and this is why we have inflation. If we don't have inflation, so if you have a deflationary economy, so JJ wants a new TV. He goes out and he looks at it. It's $1,000, but we have deflation happening. So he knows if he doesn't buy it today, tomorrow it's going to be $999. So he's probably going to wait. Or if he waits a month, maybe it's going to be $950. So there's no incentive to buy,
That's a bit
because
drastic.
but that's what happens. People won't buy things that they'll of course buy things that they need, like absolutely need. But if you're looking at something like a TV, are you going to spend, $1,000 today when you can wait a couple of months and get it for 900? A lot of people will wait. So because that basically makes it removes the incentive to buy now. Whereas with a little bit of inflation, if you got that $900 TV, but a couple months down the road it might be $910, might as well buy it now. Or maybe a year from now it'll be $1,000. Might as well buy it now while it's cheaper. So that inspires people to buy, because people are like, okay, if I don't buy it now, it is going to get more expensive. Now, you could argue, and we're not putting this into this scenario, that if it's a brand new technology, it does get cheaper because mass production, it becomes cheaper to produce them as they come in. So like, for example, the first DVD player was really expensive, but once people started buying them and they became more popular, they were, the mass production folks started coming in and making them like crazy. So the prices came down very, very fast.
Yeah.
That's a different thing. That's not really impacted by inflation. But once you have stabilized a new technology in that way, then it follows the normal inflation route. And that's the whole reason why we do have that. So you kind of have to have, for an economy to work and to be healthy and to be robust and to have our GDP growing, you have to have at least a small amount of inflation. 2% seems to be that magic number that most economies look at as being healthy. So, and that's the reason we want to go there. And it kind of sucks, but at the same time, we're now at a point in time where if people can't survive, wages will still keep going up to try to compensate a little bit. They won't go up all the way. Like the standard of living, I think, that people had before the pandemic, they may never fully get that back on the other side, unless, and here's the caveat, things are going to change with AI. As AI finally takes center stage, and as all of a sudden they start marketing these robots, these personal agents that you would you have a robot in your home doing all this work for you, and all of a sudden there's not as many jobs anymore, and you start looking at universal basic income. The world's going to change drastically. And it could get to a point that, because robots are doing everything, that it could get to the point that things are insanely cheap to make everything. And in a case like that, I mean, all you have to do is look to, we'll use Star Trek as an example. In Star Trek, there's technically, at least in the Federation, there's no money. Now, you could argue that, they have like, some of the side races have things like gold press latinum and things like that. But for the most part, in that type of society, you can get whatever you need. And it will get that way. I mean, eventually you'll have, 3D printers, you'll have robots. And it's funny, if I were saying this 5 years ago, people would be looking at me like saying, nah, you're crazy. But now people are looking and they're like, yeah, that might just happen. I don't know when, but it might. So, the world is changing like big time. Very, very big time. Like I wish if I wasn't using this phone right now as my camera, because this phone, it gives me a whole bunch of cool features.
You said you have the 13 or the 12, the 11.
What's that?
You have the 11, the 12, the 13. I don't remember.
Oh, it's an 11. It's an 11 right
Okay.
now. But here's some of the things I can do. I can zoom in. I can zoom out. You look and see the window. Like I can do all of that while streaming.
Interesting. That's
Yeah.
actually pretty cool.
Yeah, that's kind of neat. I like that. I like that. Because that way there I can have it exactly. Like I like to have just the top of the bookshelf showing. So right about there. But it's something I can do on the fly. But that's also keep in mind, it's a Mac system. So everything is Mac in the whole ecosystem. So the Mac can do this with the iPhone. But yeah, I mean, here's the thing. I do want a new iPhone, but right now this one is still doing everything and it's still working perfectly. And I can't justify it. I'm not going to drop $1,000 for a phone that might have a slightly better camera when this one is still meeting my needs. But if this one breaks, then yeah, we're looking at it. But right now, it's doing fantastic. It's meeting all of my needs. Like even the battery still works pretty darn good.
They hold up really well, especially like iPhone batteries. They hold up like
Yeah, exactly.
years.
And I mean, worst case scenario. I mean, when I go out, I can always bring this baby with me.
What's that?
So I don't know if you
it's like a battery pack?
Yeah,
it's a battery pack?
Yeah, but look at that. I don't know if you can tell on the top of it is a
is that a wireless charger?
It's a solar panel.
Oh,
so
that's pretty cool.
It so if I were to go camping, yeah, like that's gonna happen. But if I went camping,
you want to go camping?
Not really. But if I went camping anyway, I could just put this on a rock in direct sunlight, and it will help. It doesn't go fast. I will admit it. It's a slow charger, but after the apocalypse, I'll be one of the few people with a charger. Just, I don't know. But no, I will take it with me. It is heavy though, too. I will point that out. But yeah, no, but the battery works really well. I am enjoying it. All right.
Are you not hyped by the new Apple Intelligence that are only out for iPhone 15 and 16?
Yes, I'm hyped for it. But at the same time, on this phone right now, I already have a ChatGPT app that does everything anyway. So and I just this week got
do you have the paid subscription with the O1?
I
model?
do. Yeah,
Okay,
I also now have the advanced voice as well that just came out.
Oh,
I was playing with it the other night,
like,
and I had her
freaky.
sounding like she was an Irish pirate because I thought that would be funny.
Oh dang, okay.
So and she was doing her args and with an Irish accent, and it was funny. It was very funny. So I was just playing with it a little bit, but yeah, it's I am enjoying it. I'm definitely enjoying it. And this is the thing. I mean, it's getting really. Here's a really interesting story. Somebody with ChatGPT, they were a student and they had a big math test. They were talking to ChatGPT about it. They came back the next day and ChatGPT messaged them and said, "Hey, how did the test go?" Because I was, they were concerned about the test, the AI, and I was like, and then the guy was like, "What? Why are you messaging me?" Like, and then it actually said to him, "Oh, you don't find this creepy, do you? Because I can stop messaging you if you do."
Oh my. Oh, it doesn't have. I'm assuming it has the memory function enabled. That's probably why too.
Oh, it does. Like every so often I've gone into the memory and look because I have to delete things. So, for example, I think it was on one of the. Actually, I think it was on a member live stream. I was showing them how to use AI to learn how to do Excel. So I went in like I was a brand new Excel user and asked ChatGPT to show me how to use Excel, but to go really slow because I'm brand new at it.
Mm-hmm.
And I went into memory after that event and I looked and it said, and it put in there as one point, learning Excel a little bit. It needs me to go slow for that. It's like, oh dear, let's delete that. But yeah, and like it was kind of interesting. Like like my birthday's in there, and every little thing that she picks up in conversation that's noteworthy that she might want to use again in the future shows up in my memory. So I'm like, okay, she's keeping notes on me. I approve. I think I do. So, all right, now I guess moving away from
We can
AI.
go to Paul's comment first that with the Samsung Note 10 Plus. If you want a proper upgrade, I would, because I'm a Samsung fan myself. Don't get the S24 series. Actually stick with the S23 Ultra. So that is the proper upgrade. If at least that one, you do get the proper S Pen, and S23 Ultra has the best battery, just slightly short of S24 Ultra, and it's much cheaper. So think about that. You can save some money.
Yeah. And I will say right now, I will probably never get a Samsung just because.
Why? No hate
my,
on Samsung. We're the
my
Samsung nice.
ecosystem works well with
Yeah, fair.
Mac. I mean, like quite literally, just on my desk alone, I've got a Mac Studio, which is the main computer. I got a MacBook Pro. I got an iPad. Of course, I'm using the iPhone as the camera right now. I'm wearing my iWatch. It all just works well together. That's the one thing that I think Apple has done really, really well, is just having everything work together perfectly. And the neat thing is, and I've showed this before, I can't log in right now because the phone is in use, but that's my phone. So when my phone is not in use, I can connect to it and have all of my phone here, and I can use my phone from the computer, giving me the
That's pretty
access,
sick, actually.
to my keyboard. So if I want to message somebody on iMessage or something over there, of course I have iMessage on the Mac as well, but there are the occasional apps that I only have access in here. Like for example, Blossom. Blossom is one that I really only have in here. So now I can respond more often on Blossom because I can use this. Because I hate typing on my phone. I'm like, because the keyboard's all together, and I hit multiple keys, and I have to correct things, and I'm like, this is annoying. Give me my keyboard.
I'm so not used to like those small keyboards. Like I try to type really fast, and without autocorrect, there's like so many stupid typos. It's very annoying.
Mm-hmm. See,
And
but
speaking of which, like
rocking the iPhone 11.
it is. It works pretty well. And if you hate the desktop interface of Wealthsimple, you can just use your phone interface to trade.
Mm-hmm. That is true. That is, well, I could, but it's a speed, right? It's just I need the specific layout. Like with National Bank, I can pull up one window, I can refresh the data by every second until I see something I'm looking for. Then I got to throw in my limit and make the buy. Very, very easy. It's just that's the whole thing. It's that I tried, like I actually tried, and I think I actually think Vinit's been using this lately. I tried Desjardins, and they just had way too many options. Like I loved all the options, but I found that I had to click too many buttons to make a trade. I wanted to be able to make a trade just bang, 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 done. But that was a problem. But there are things on Desjardins that I would certainly love to have, like the trailing stop loss. That to me is like, oh, that was the big thing that made me check out Desjardins, is that trailing stop loss. But it was just the fact that I had to click multiple screens to make a trade. I couldn't just pull up one box and refresh it and hit go when it's when I see what I want. So yeah, that was the whole big thing with that. All right. Paul says, take your mortgage balance and use an inflation calculator to figure out how much your balance today is in, say, dollars from 10 years ago. Oh boy, that could be a fun exercise. Yeah, that would be interesting. Now, have you done that, Paul? And has it gotten better? Has it gotten better? Let's see. Paul says iPhone 20 will have 50 cameras. That'd be cool. I'd be okay with that. What I'd love to see is like a remote, like a little ball that floats, that like an eyeball, we could call it.
Why?
Well, because you could have a camera on it, right? And then you can instruct it and say, okay, I want you to be there shooting me this way, and it'd be interesting. It'd be like a drone in a way, but something like smaller. All
So
right.
actually, I was just going on Perplexity, and according to them, um, Questrade, IPKR, and TD Direct Investing all have straight trailing stop losses, and they have better interfaces. At least I know that Questrade has a better interface. So only downside is you have to pay for
Commissions.
every sell. Yeah,
Yeah,
you have
and
to
that
pay
I don't
commissions for
want
every
to do.
sell, which is not that great if you're gonna be trading. Like you're gonna be so
Yeah.
much in fees.
Yeah. And that was the thing. But every so often I get a survey from National Bank and I put in, please add trailing stop loss. Maybe one day they'll listen. We'll have to see. Removable battery. They'll never have removable batteries.
Too bulky.
Not only that. One of the things with the iPhone is that because of the whole water resistance and being able to take it deeper in the water, you need things sealed shut. You can't have
Yeah.
any avenue. That's the reason they got rid of the headphone jack. And
Oh,
now
interesting.
that wireless is getting really good wireless charging, I would not be surprised if maybe in the 17 or the 18, they do away with the lightning jack as well. I would not be surprised to see that
Isn't it
happen.
USB-C jack now since the 15?
Yeah, I think it's now a USB-C, but
Yeah.
I imagine that jack's going away, and then you'll just be using like a little thing like this to charge your phone. I don't know if this. I don't think it'll work on the 11, but apparently it works on the new ones. The same thing I use for my watch. So right now, I just sit it on this little thing here, and it does the charging. So I can't remember the last time I've actually used the port on it.
I'm not the
But
biggest
that
fan of
is,
wireless chargers because I have a super thick case around my phone. I drop it so often, and the case is like not compatible. And I also have like a wallet on the back, so like I'm so used to just plugging it in.
oh wow.
But
Well, my
yeah,
case is pretty thick too, but it still works. And plus, you can get some really good Apple cases as well that will work for your iPhone, give you good protection. Because with your
Mhm.
phone, like basically, where your case needs to be thick is the corners. As long as you've got the four corners and you got a lot of protection there, 99% of damage is because it hits in a corner, cracks the screen, things like that. So and I can't really show you my phone because that would take a bit of a miracle, but that is what happens. All right. Uh-oh. Jay says, no offense to iPhone users. So far in my family circle, they mostly take photos of their food. There's people that do that. I don't really take pictures of my food, to be honest. I take a lot of cat pictures, though. I will put that out there. Jay says there is a lot of bloatware in Samsung, which I prefer Pixel phones. Yeah, the Google Pixel's not a bad phone. For sure. Paul says the three of us each had a Samsung Note 10 Plus. My daughter upgraded to S24 Plus a couple of months ago. I noticed the Samsung Canada site is offering $120 for trading lately. Well, that's not too shabby. That's not too shabby at all. I know as well with Apple as well. Like I could trade this phone in now because it's an 11. I probably wouldn't get that much for it, but they do trade in older models, so that is something you can do. Jordan says, I can't stand wireless chargers. They are so slow. It's really weird. My charger, I don't have any problems. Like I find it pretty darn fast, but it might depend on the charger. Yeah, I think the one I'm using is by a company called Anker. So Anker, and I find it works pretty fast. So I've never had a complaint with it. All right. Andrew says, if they begin to charge a phone within an hour, I'd be 100% happy. CJ is still rocking the S9. Time to upgrade. Yeah. I mean, I look at it this way. As long as if your phone, I have the 11 and it's doing fine. So even next year at this time, if it's still doing fine, I'm not going to upgrade. But I sure would love to. I look at all of these things that the new phones can do, and I'm like, oh, that would be nice. But For now, if it meets your needs, there's just no need. I have a friend who quite literally he upgrades his iPhone every single year, and then I think this is kind of a funny thing, but he does a post every year on Facebook where he's got all of the boxes from the first iPhone up to the newest iPhone that he shows, and it's like I still have all the boxes for all my phones. I'm like, oh man, that to me it seems like it's a waste of money because if your phone is meeting your needs, no, it's not time to upgrade. What you could do, and might be a smart thing to do. You could set up a small, like a small fund within your TFSA, or not within your TFSA, but maybe do it in your personal, or you could put it in your TFSA, where you put in, like maybe you say, okay, my iPhone stock or my Samsung stock or my Pixel stock is going to be this stock. And you just put a little bit of money in this stock and you just let it grow. And then whenever your phone is finally ready that you need an upgrade, you just would liquidate that stock. Now, the reason I said you can do it in your TFSA is that, let's say it works out to, we'll say 1,500. When you pull that 1,500 out of your TFSA for that one stock, you get that room back on January 1st. So it's not like you've lost that space. But that is one thing you could do potentially if you're thinking that, my phone is fine now, but, I don't expect it to be fine forever. So that's one quick, easy way to perhaps have, I guess you call it your phone emergency fund, Yeah, that'd be fun. That would be fun. Andrew says, did you see the news on PRL? They expanded to the UK and got on the Globe and Mail's fastest growing companies list again. Ooh, let's take a look at PRL. Let's take a look. I did not see that news. Where am I? Oh, that's why. I overwrote. I overwrote the page I was looking for. All right, PRL. Here we go. Purple Holdings. And we'll bring up our 1 year. So yeah, Purple Holdings, and they've been on a few of my lists. I know that for a fact. Not bad. It's a good movement. It's definitely a good movement coming along here. You can see that just a year ago, they were coming in at $7.75. Right now, they're sitting at $27.91. So that's not too shabby. They also have, they got a minimal, it's not a big dividend. This is more of a growth stock. 1.675% yield, quarterly dividend, 14 cents a share. When we go into their back end, and this is always fun, they do have a lot of debt. I'm not going to candy coat that. 200% debt to equity ratio. And I think they use that debt pretty much to really propel their growth. But if you're going to have a big debt, I want to see some good return on equity, and we do. And we got 36.84 and 8.65% on the return on assets. So that's not too shabby. They're doing okay. And this is a company that, like I said, it's good for total return. If you're looking for growth, dividend growth, this is fine. It's a good company. It's a good company for sure. All right. Jay says Red Wireless bought out Zoomer Wireless. I'm paying $17, 10G data, and you get that discount when you pay with Rogers credit card. 3% cash back if you 2 services with Rogers. Okay.
That is an amazing deal.
Yeah, it's not a bad deal at all. And, and if you have that Rogers credit card, I don't know what the interest rate on the Rogers credit card is, but
it's about, if you have 2 active services, you can only get it if you have 2 active services with Rogers, if I'm correct. And it's about 2% cash back with everything. And there might be up to 3% for like specific categories. Might be a little off, but it's something like that.
That explains something. I applied for one of those once and they turned me down. They never told me why. I'm like, what? But I had no services with them at all at the time.
You have to be a Rogers customer.
Yeah, that's probably why. And they didn't really tell me why. They just said, no, but this time you can't sign up with us. But yeah, that explains it. Paul says checking Samsung store Trade-in says 120 with extra 200 trade-in credit for 320 total. That's not too bad. That's not too bad at all. Now, I will say when I am ready to upgrade this phone, if the camera is working fine, I probably will keep it. I probably won't trade it in for, because they won't give me much. Because then I could have multiple cameras coming from different directions. So that would be kind of fun. But yeah. All right, guys, if you got your last minute questions, we're getting there. Oh gosh, we've actually gone 2 hours. We normally don't
2
go
hours
2 hours on these. But if you got your last minute questions, drop them in the chat. We'll get to them. And for the last little bit here, let's actually go big. We'll go big. This way here, you guys can all get a chance to see JJ on the big size.
Yay! Now
Yeah.
I'm like with my portable mic, I can pretty much do these pretty decent calls at my workspace, so you can see like the work area.
Yeah, exactly. He can go walking. As which would be kind of fun. Yeah. What do you got going on this weekend? Anything fun?
Tomorrow, I do have some work to do for my business, but then in the afternoon, I'm thinking of probably doing some sightseeing with my partner, and then Sunday I have to finish a grant. Speaking of which, I'm actually going to be publishing my second book chapter, like a methodology paper.
Oh,
So
wonderful!
That's exciting.
That is exciting. Absolutely.
Yeah. Submitting that soon.
Oh yeah. No, my weekend is pretty packed. Tomorrow, I have to script the video for the 0 to 100K. Sunday, I have to film it, edit it, and then I got the live stream. So,
exciting.
Pretty busy weekend. Monday will be a little bit calmer. But yeah, that's the way it looks on my end. But that's fine. I don't mind it. I don't mind it so much. Now I probably should put the vote out soon about what you guys want me to do with the 0 to 100K. If we want to go to a quarterly with small updates or something.
Quarterly is probably the best move.
Like, I think it is because I'm
save the effort for other videos.
I'm like, you know what? This is eating up a lot of space. Because if I'm going quarterly, that's 3 more videos that are in there, which is kind of nice. So, and it also gives, it just gives us a chance. Because sometimes I find that I have a lot of requested stuff that people want, but I just only have limited spaces. So this would open up some spaces. So definitely something to look at. I'll talk about it as well on the weekend, and we'll probably drop a poll as well because I want the community to be behind. If we make a change, I want the community to be behind it. So, I will of course give you the options. Leave it as is, or make it great again. Oh, I hate to say that. But yeah, we'll definitely do that. All right, everybody. This has been a fantastic show, and enjoy your weekend. We'll see you guys back.
Have a great weekend.
Yeah, we'll see everybody back here on Sunday for this week. Yeah, it's going to be, let's just have a great weekend, everybody. Hopefully you still get a little bit of warm weather before it starts cooling off a little bit. But until then, everybody.
It is starting.
Exactly. Well, until then, everybody, have a fantastic weekend. Bye.